And we are going live with Garrett Baldwin and Midday Momentum, and as a very special guest in 5, 4, 3, 2.
Good afternoon, everybody. Hope you're having a great day. March 10th, S&P 500 is chopping around today after the jobs report. We have a lot to talk about, but we're going to get right into it. It is March 10th. We will talk about momentum briefly, and then we have our special guest, Anthony Scaramucci. Momentum is red. We did drop under that 200-day moving average. Momentum has been red since Monday afternoon. We have been net short in this market and just took a gain on Confluent after a pullback in that data company. This is also the 23rd anniversary of the .com top, and history doesn't rhyme, but, well, you know how this ends. Anyway, we're going to have a lot of fun today. We have Anthony Scaramucci with us. He is the founder and managing director of Skybridge Capital, a global leader in the alternative investment industry. And, of course, we might get some insight into the New York Mets as well. Anthony, great to see you again. How are you today?
Well, first of all, I love Sandra Dee on the background there. You know, I mean, it makes me think of my youth. And my hair was blown back like Tony Manero, you know. But in all seriousness, it's great to be on, Garrett. Thank you so much for having me. And the market is very choppy, which is a euphemism that we are re-entering a bear market unless the Fed makes a decision to pivot. If they decide not to pivot, you're probably going to see the market trade down 15 to 20%. Mike Wilson from the Morgan Stanley is going to be right because it's not sustainable. You're not going to be able. You had 400 basis points of interest rates in 12 months, 500 points in 21 months. It's not sustainable. And they are now starting to break things. And you do have something like $1.5 to $2 trillion of losses on the books and records of the nation's banks as a result of the U.S. Treasuries that they're holding that have been crushed by the interest rate rise. So you got a lot of things going on at the same time. Fed is making a mistake. I've said this consistently. The inflation will come down. They're not going to be able to move it. They've moved 550 basis points. The inflation dropped 100 basis points. A Nash game theory analysis is just incorrect what they're doing. They would have been way smarter to put less money into the market, obviously, but that's yesterday's news. Now they just need to wait for the technology and the supply chain to catch up to bring the prices down. Okay, but they're not going to do that. They're going to try to crush the market to prove a point. They'll put millions of people out of work. You'll have a real estate recession, further stock market recession, et cetera. I don't think it's necessary at this point, but that's where they're going. So it's disappointing. It's rank incompetence. You know, at least Bernanke understood when things were breaking that you had to go in there. If you're going to have a Fed and not just allow the market to do what it does, you got to step in and try to help people. And I'm not talking about a Fed put for guys like me. We're going to be fine one way or another. I'm really talking about the middle class and the man on the street. You know, it's a disaster the way they're handling things.
Well, let's talk about, you just brought this term up, they're starting to break things, and the big headline today is obviously in SVB Capital. Skybridge centers its focus on alternative investments, and that includes venture capital at the front end of the private investment value chain. So what is your assessment of this? Because this was a pretty classic bank run that has transpired in the last 48 hours, and now you have the FDIC shutting down SVB, which is the parent of Silicon Valley Bank.
Yeah, so it's a classic bank run. It's the weaker part of the market because it's the early growth stage of the market. I think in the case of Silvergate and SVB, they got high multiples because they were concentrated in high growth. They both needed to, frankly, be way more diversified as banks, but they were trying to have a mission statement that they were either dedicated to growth, Silicon Valley Bank, or dedicated to crypto, Silvergate. So they couldn't withstand ultimately what the Fed was doing. And, everybody on this call knows this, but it's worth repeating. You put the money in the bank, it's no longer your money. You are loaning a low interest rate loan to the bank, okay, in exchange for what you think is their repository. And if it's above $250,000, it's really not guaranteed. Now, the Fed has always stepped in on these banking failures to replenish people's savings accounts. They did that with Continental Illinois back in 1980, and they will probably make sure that the Silvergate account holders and the SVB, the Silicon Valley account holders, get their money back. But again, unnecessary. It's just we've stopped reacting as it relates to policy in terms of what is right or wrong, and we're now reacting to policy with, okay, is this politically expedient or is it not politically expedient, or what is Elizabeth Warren going to say to me on national television that could be upsetting? I don't know. Guys, focus on what's right or wrong as opposed to left or right or tribal, or this is going to make me look bad for 5 seconds. Who cares? This is not Paul Volcker's Fed. This is not the 1979-80 interest rate crisis. We're in a totally different economy now. And you have the introduction of AI. You have the introduction of just-in-time inventory improvements. I can name 20 different things, Gary, that are disinflationary. They're going to bring prices down, including a new wave of biotechnology that's going to lower the cost of healthcare. And so what are you guys doing? Okay, you're going to break the economy for what reason? You're going to be sitting here worried about deflation in 36 months. And we're going to be sitting here saying, okay, how do we do that?
We're going to get to the disruption issue momentarily. I did want to ask you real quickly.
You're cheaper than my therapist, by the way, Baldwin. Okay, just so you're letting me vent. You're not even charging me to do it, so it's good.
Happy to have you here. Happy to let you do it.
I may not have to call my shrink today as a result of this conversation.
Hey, just send me a check or send me a Mets Orioles ticket. I greatly appreciate it. I do want to get your view on Silvergate.
You want to come? Are the Mets playing the Orioles at Citi Field this year? I didn't look at the schedule.
I don't know if it's in Baltimore or not. We'll have to look. We're going to talk about the Mets momentarily.
If it's at Citi Field, you're coming to my suite. Okay, I've got one right downstairs. Okay, it's my only luxury that I've allowed myself to really have in my life because I'm a diehard Met fan, and I've lived in a house of pain. If you're an Orioles fan, you've lived in a house of pain like me. And so let's go have some pain together. We can sit there and whine about our teams.
I will take you up on that offer. I won't even bring up the fact that I'm a Buffalo Bills fan. Oops, unfortunately, I did that as well. I do want to get your take on the Silvergate situation, though, because you were quoted in the Wall Street Journal yesterday disputing the opinion of your friend John Stark, a former SEC official. He had said that the Silvergate liquidation was a cataclysmic event for crypto. Skybridge, you have a longer-term view on crypto. So what is your interpretation of that voluntary liquidation?
John hates crypto. So see, John is part of the I hate crypto cult. Okay. And then you have the Bitcoin and crypto maximalists where all they care about is crypto or Bitcoin. I'm neither of those two things. I'm too practical for that. There are things that John is saying about fraud that I totally agree with. And there's things about the technology that John is totally missing. This technology is going to be very transformative, and it's going to make us more economically efficient. But what I was saying to the Wall Street Journal and John, Silvergate Bank failing is not a cataclysm. We can go back to other bank failures. They were not cataclysms. You mentioned at the top of the show, the 23rd anniversary of the NASDAQ top. I'm old enough to remember that in the year of 2000, March of 2000. We're also the 14th anniversary of the S&P low back in 2009. So March seems to be a real tricky month for markets. And none of that stuff hurt the long-term trajectory of economic progress, economic innovation, and improvement. So John is saying that stuff because he's too emotional about his position being so negative related to crypto. Silvergate can fail. Depositors are probably safe. They'll move their deposits elsewhere. Crypto is in winter for right now. The regulatory environment is very rough. Sam Bankman-Fried made it rougher for the crypto industry because of what he did. Lots of embarrassed people in Washington. But crypto's not going anywhere. I was in Abu Dhabi last week. We did our SALT conference in Abu Dhabi on Yas Island. And I met with both Abu Dhabi regulators and Dubai regulators. They are building the framework to trade and grow virtual asset, digital asset ecosystems in the Middle East. If the United States doesn't want to be a part of that, that's fine. We'll cede our mantle of financial services leadership to other countries. If you want to leave us out of that, there's nothing I can do. We can try to explain to the regulators and the politicians that we need to be a part of this, but if they don't want us to be a part of it, it will move offshore. There'll be intellectual capital flight. And an economic historian will write about this passage of time and say, wow, that was a big miss for the United States. And so, but Silvergate's not a cataclysm. Silicon Valley Bank is not a cataclysm. Enron wasn't a cataclysm. Now, let me make this one last point. We've lost $2.4 trillion in the cryptocurrency markets since November of 2021. $2.4 trillion. I submit to you and your listeners and your viewers, imagine if we lost $2.4 trillion in the money center banks that are tied to the Federal Reserve.
Sure.
We would have a 7-alarm fire going on in Washington. And so this speaks to the anti-fragility of decentralization and the anti-fragility of what that system could actually be, because it's not overly centralized and overly tied to each other, which causes these boom-bust cycles. So anyway, it's just a point I want to make.
Well, let's keep talking about just briefly the annual conference that you just had in Abu Dhabi. You got an opportunity to get a different perspective of global markets and geopolitical views from outside the United States. So what were the key themes and the takeaways from that event?
Well, that area of the world is growing leaps and bounds. The oil markets, the positivity in the oil markets has led to a tremendous amount of free cash flow. These countries are wisely investing that cash flow in infrastructure and resources to improve the countries. And, you know, when the day comes when the oil is gone from those countries, they're hoping to have very vibrant goods and services economies away from oil. And I think they're doing a good job of that. I think as it relates to China and Russia, which I would say are both adversaries to the United States, China, competitive adversary, Russia, more of a political, geopolitical adversary. I think that there's more of a spirit of neutrality in those countries. And I think it's important that we allow those countries to have that neutrality, because throughout history, when you have warring superpowers, you need places for these people to go to sit down and talk. Maybe that was Switzerland in the post-World War II era, and it may end up being places like the UAE in the 21st century. So to me, their perspective is one of trying to have some balance in a highly tense geopolitical environment that we're living in right now. And so I think, one last point, I think most people think that the war in the Ukraine with the Russians is going to grind and continue to grind. The markets have sort of adjusted to that now. But I'll tell you, there's unspeakable tragedy going on the ground in the Ukraine. And we really need some political leadership or some political will to figure out a solution to stop that, because it's just it's a human tragedy, Garrett. Ultimately, that's the thing that I would like to say to people. Yes, I get that we have our egos involved and the Russians have their egos involved, and I understand the geopolitical tension and so forth, but we did that in Vietnam, and it ended very unsuccessfully. And so we should really figure out a way to end that bloodshed. It's not clear to me that the sides are talking. And one thing that I learned in the Middle East last week is that I think the people want to talk more than they currently are. So I don't know how we're going to get those talks started, but we have to get those talks started. Trump said something idiotic last night, that he would have ceded land, Ukrainian land. I mean, that's absolutely idiotic. You can't do that, okay, because that goes right back to the whole Neville Chamberlain Munich sort of situation. But there is a deal that could be cut that saves Putin some further embarrassment and protects the sovereignty of the Ukraine.
One of the things you do a very good job of, though, Anthony, is you bring a lot of people together, whether it's in the financial world, also in the political world. So we'll talk a little bit about the May SALT iConnections conference. There will be people talking about these big issues, whether they're political or financial. But one of the themes around that event that is upcoming is disruptive innovation, and whether that is in politics or whether it's in how we kind of see international political strife or how we look at finance. We've been talking a lot about artificial intelligence. We've been talking a lot about disruption. What is your definition of disruption in these markets right now?
Well, anything that's status quo that is going to change, and there's a large group of people that do not want that status quo to change. And so, as an example, I own a restaurant in New York City. Obviously, we want the change being a wallet-to-wallet transfer from the consumer purchasing food and services in the restaurant to the restaurant. That would save us 3% on Amex or Visa. If you have a 15% margin in a restaurant like that, that's a 20% improvement in your profitability. Okay, so that is a status quo change. That is very disruptive. If you're telling me that ChatGPT or other AI mechanisms can help do paralegal research, could help put prospectuses together, that 24-year-old analysts working 160 hours a week were doing in my era, but ChatGPT could do it for us in several hours or an hour. That's going to be very transformative and disruptive to the status quo. If you're telling me we're eventually going to have automated cars, well, that's going to change a lot of lifestyles, going to change a lot of people's jobs. We're probably a while away from that, but I think that is coming. The other thing I would ask you to think about is observing the past for a second, because it's somewhat predictive of the future. If we go back to 1998, we couldn't have this conversation because we didn't have this George Jetson set up over our phone lines. But if we went back to 1998, it took 55 seconds to get my AOL page to land on my home screen. I had a fat box computer with a corded mouse. And people said, okay, well, the streaming, no one's going to be able to stream on this. Look how slow and clunky it is. Commerce is not going to happen on this to the great extent. Look how clunky it is. And they missed the exponential improvement in the technology and the wider bandwidth and the pipes that were built over the 25 ensuing years. And so we're sitting here now where we can have billions of people live stream 4K video. We're doing trillions of dollars of activity on the internet. The internet effectively saved a lot of white-collar jobs during the pandemic. My point is, things that we're looking at now, where a naysayer like John Stark will talk about crypto and say, well, there's not great applications for it. We're in the 1998 time zone for crypto. By the time we get out 25 years, there'll be enormous applications, and they will be very disruptive. And by the way, the internet disrupted things. How many typewriters do you own in your house, Gary? You own a lot of typewriters?
I don't own a lot of typewriters, and my phone has replaced all of our board games and all of my digital assistants. I don't have all of that stuff is disrupted.
The phone ate up everything. Unfortunately, it did eat up some of the physical activity of our children. We got to get our children out there running around a little more. But yeah, the phone ate up everything. And so anything that you would define as, okay, the status quo is changing. The money center bank and the slow grind of processing payments globally is going to be disrupted by this new technology. Okay, I don't like that. Let me call the new technology venereal disease. Let me call it a pet rock. Let me call it a Ponzi scheme, because I don't like that. Okay, it's the same thing as that guy that was making saddles said, well, I don't understand that motorized thing, that horseless carriage, that's a fad. And then he was replaced by it. Or, somebody said to me, well, Bitcoin doesn't have a lot of application and it's 14 years old. It's an old technology. And I said to that person, well, how about 1903 when we invented flight? By 1917, there were naysayers saying there would be no commercial applicability for aviation. And so we miss things because we think linearly while the world is moving exponentially. And so I would caution your viewers and listeners to not be overly pessimistic. We've been in a storm for 3 years, lots of volatility, lots of oscillation, lots of negativity. But don't let that form all of your thinking. Don't say, okay, well, we had a bad year in 22, 23 starting out rough. I believe that this stuff is going to get way better. One more fact, just to tie it in September of 2008, Lehman Brothers crashed. Everyone thought that was the bottom. Okay, the Fed really broke something big. Lehman Brothers has crashed, but that wasn't the bottom. It took 6 more months to create that bottom, and we're celebrating that anniversary now, 14 years later. And I would maintain that FTX was the big crash in the crypto markets, and it's churning and burning right now. And I don't think we get out of this thing until June, July, meaning you have the crash, and then you have the ripple effect taking out things like Silvergate, which put pressure on Silicon Valley Bank, which is ultimately going to put pressure on the Fed.
So in this situation, last time that we spoke about crypto, we were talking about Algorand, we were talking about Bitcoin. Are there any projects that have captured your imagination in recent months, especially if there is a pullback and opportunity to buy?
Yes, well, we announced a deal last week in Abu Dhabi with Casper Labs. If you understand Casper, the token is CSPR. But if you really understand the technology, it's a decentralized enterprise software protocol. And so the engineers at Casper Labs believe that over time, the way we've set up these enterprise software engines is overly centralized, and you'll be able to do this with their help using their token. Think of their token as like an AWS credit that you'll be able to use on their system to create your enterprise software. And so that'll make the enterprise software way more confidential, more efficient, more cost effective. And so we made a big investment in that. We made that announcement last week. We have a big position in Algorand. I still like Algorand. They're having troubles recently because I think a wallet that was tied to the foundation got hacked. It's unfortunate. Algorand itself has never been hacked, but I think some people had their tokens taken out of their wallets, which is unfortunate. And, we're a little bit in the Wild West in crypto until the SEC and the Congress makes a decision that they're going to regulate crypto and screen out some of the scamsters. We're going to have that sort of slow grind in crypto, which sort of sucks, to be honest. But we're long Bitcoin, Solana, Algorand, Casper Labs. I have a small gaming token that has a very big metaverse following called Vulcan Forged. It's an AI graduate, artificial intelligence graduate from the London College. He's working in Athens. He's built up a 250,000 person user base. So he's got way more users than Sandbox, but he's trading at a much lower valuation. We have a fairly large investment in that. The symbol for that is PYR. And because of what's going on in the markets right now, most of this stuff is off again 20 to 40% from its recent high. And so this is another attractive time. We're getting the opportunity once again to buy Bitcoin at the $20,000 level. And so we have stepped in to start buying it again here. Last point about all of this is there's a halving cycle coming in 11 months. Bitcoin's going to go from 900 coins a day spitting out of the network to 450 coins. And I want people to remember that when that stuff happens, that decrease in supply usually drives prices up. At least it's done that for the last 14 years. So stay the course. If you're in this stuff, don't get shaken out of it. I like to tease people and say everybody's a long-term investor until they have short-term losses. The minute they have short-term losses, they flip out. Calm down. Recognize the long-term trajectory of these trends. And don't be the sucker that sells at the bottom and then scratches your head and says, why? Again, going back 23 years ago, Amazon traded from 116 to 8. People blew it out. Barron's wrote a nasty article about Jeff Bezos, said that the age of this internet retailer is now over. They called it Amazon.bomb. But of course, if you held on and you bought it at the low, a $10,000 investment in Amazon is now worth $14 million. and that includes the most recent corrections. So great companies, great ideas, great trends are worth staying in despite short-termism and overly emotional market activity.
Anthony, I have 3 quick questions for you. We're coming up at the top of the hour. I really appreciate your time. I conclude almost every interview with the same question, and I want to propose it to you. You're on a lot of media channels. You were just in the Wall Street Journal, and your insights sought globally. What's the question that journalists don't ask you that you wish that they would, and what's the answer to that? What do you think that people should be talking about more?
Well, they never ask the good stuff. Like, they never say, okay, so what are you working on from a charity perspective, or what are you working on to try to improve the world? They never ask that. They've tried to write they've tried to write my obituary 5 or 6 times. I think Bloomberg is going to come out with a nasty article next week, once again, writing my obituary. I finally told the reporter, she wrote a negative article about me in January. She's now writing a negative article about me in March. I'm like, I'm Italian. If you're going to keep putting out my funeral, I need a good picture in these articles, because Italians have open caskets at their funerals, and I got to have a very good picture in there. So, no, but the journalists focus on negativity. The journalists focus on the rubbernecking that goes on, the joy that sometimes people get from other people's pain. But a good journalist should say, hey, so what are you working on that's positive for the world, positive for you, positive for your family? But that doesn't come up. What are the other quick? I know we had 2 minutes left.
What are you working on from a charity perspective?
So, we're working. I've been on the Brain Tumor Board for 23 years. We're making great strides, great breakthroughs. I have, unfortunately, addiction issues in my family. We're working on biotechnological therapies for that, in addition to the counseling and the Narcanon meetings and the AA meetings, which I think will be an enormous breakthrough for the society, because unfortunately 13 to 14% of us have drug dependency or alcohol related issues. And so that will be a wonderful thing for the society if we can help solve that illness. It's effectively an illness. And then the third thing is we're spending a ton of money on pre-K education to help people get a head start in school. And so those are some of my pet projects that I love. And it's a labor of love for me. I'm obviously a donator to a lot of these military charities as well. And I've been to Iraq and Afghanistan on troop support missions and love the country and want to support our troops that are making big sacrifices for us. But I appreciate you bringing it up, but not that I needed you to. I'm just saying they never talk about the good stuff.
There were 2 parts to that question.
Working people on Wall Street,
There were 2 parts to the question. What's the question people don't ask, and what's the answer? Real quick, rapid fire. We know that you went to Harvard, but we also know where you went to undergrad. There are 4 universities that have mascots that are elephants. Can you name 2 of them?
Wow, you really got me there. And we're running out of time, so I'm going to say, Tufts
University of Alabama, and there's some very small school, and then also Cal State. Final thing, I've got the Mets beating Toronto in 6 in the World Series. What are your thoughts?
Series. Oh my God, that would be the greatest thing. The only thing better than that would be the Mets beating the Yankees. I mean, that would be the greatest thing. But listen, man, I've been in a house of pain, so I always start the year with great enthusiasm and optimism. And I always end the year in horror. I'm hoping this year I end it with absolute joy. But I'm never giving up, okay?
Yep.
I expect to be 90 and still rooting for that team.
We are, as you know, Orioles fans. We've got the chains right here, but we are also Buck Showalter fans, so we're pulling for them. Everyone, please check out Salt Talks with the latest interview of the CEO of Algorand. And for more about Skybridge, check out Anthony's book, Hopping Over the Rabbit Hole, on Amazon. He's also the host of a new podcast called Open Book, so check that out where you download your podcasts. Anthony, thank you so much for joining us today.
Thank you so much. Have a great weekend.
All right, everybody, have a great day. And everyone at the American Institute for Crypto Investors, you'll be getting a follow-up on this and Anthony's insight on crypto. Everybody have a great day. We will see you on Monday, Money Morning Live at 8:30. Take care.
1,254%, 995%, 824%, and 491%. These numbers are some of the top percentage gains that members of Digital Heavyweights are seeing in their model portfolio right now. We're in the middle of the maximum profit window to trade these digital AI